Hey guys, what's up? Welcome back to another episode of Daffy's Digital Playbook. Today, we're going to talk about how to invest in an S&P 500 index fund. So let's get into it. Now, before we even get started, if you're interested in learning more about personal finance, feel free to check out my channel. There are a lot of great resources available for free. And also consider subscribing because we have new videos coming out every single week. Okay, so the first thing that we need to cover is what an S&P 500 fund is. Now the truth is that you actually can't invest in the S&P 500 index itself because it's not a security. The S&P 500 is just an index of the 500 largest companies in the United States. But there are thousands of different funds that you can buy that track the performance of the S&P 500. So when you're buying shares of an S&P 500 fund, what you're really doing is buying a small piece of all of those 500 different companies. So here's what an S&P 500 fund is. It's a collection of stocks from 500 of the largest publicly traded companies in the United States. These companies are selected by the S&P Dow Jones Indices, LC, and the fund buys shares of all these different companies in proportion to their overall market cap. For example, if Apple makes up 4% of the entire index, then 4% of the fund's holdings will be in Apple stock. Since the S&P 500 includes such a broad range of well-known companies, investing in an S&P 500 index fund gives you instant diversification across multiple sectors within the U.S. economy. An S&P 500 index fund allows you to invest in the stock market without having to pick individual stocks. And since the stock market historically averages around a 10% return each year, this is a pretty good option for long-term investors who aren't looking to actively manage their portfolios. So now that we know what an S&P 500 fund is, let's open a brokerage account so that we can invest in one, okay? So to do this, you're going to want to head on over to a site like Vanguard or Fidelity. You can also use Charles Schwab, but I'm personally a fan of Vanguard because they have some of the lowest fees around. Once you're at Vanguard, click on the button where it says Open an Account. From there, you'll see two different options. One is a new account, and the other is a transfer an existing account. If you already have an existing brokerage account, then you can go ahead and transfer your money from your old brokerage account to your new brokerage account at Vanguard. But if this is your very first account, then you're going to click on New Account and choose between an individual or joint account. Since I'm opening this account by myself, I'm going to click on Individual Account. From there, I'm going to enter my personal details, which include my social security number, my birthday, my home address, and then finally my occupation. Next, I'm going to have to link my bank account so that I can deposit money into my new brokerage account. And last but not least, I'm going to enter some investment details. Vanguard wants to know if you've opened a new account in the last 30 days. Luckily, I haven't, so I'm going to answer no to that question. And then they ask you how much you expect to invest over the next 30 days. After you fill out all of this information, Vanguard is going to ask you how you would like to invest your money. This is where you can choose between different types of accounts, like a traditional IRA or Roth IRA. If you're under the age of 50 and you want to reduce your taxable income, then you should consider opening a Roth IRA. That way, all of your gains will be tax-free once you reach the age of 59 and a half. But if you're over the age of 50 or you don't care about tax-free gains, then you can just open a standard brokerage account. Since I'm young and I want my money to grow tax-free, I'm going to click on Open a Roth IRA. From there, I'm going to have to take a quick quiz to make sure that I understand the rules surrounding Roth IRAs. As you can see, I answered all of the questions correctly, so I'm going to go ahead and click on Continue. And congratulations, you've successfully opened your brand new Roth IRA account. It usually takes less than 5 minutes to open an account at Vanguard. Alright, so now that we have our brokerage account, let's look at some different ways to invest in an S&P 500 index fund. Alright, so the first type of fund that you can invest in is called an ETF. ETF stands for Exchange Traded Fund. It's basically a basket of securities that contains a variety of different assets, such as stocks and bonds. ETFs are bought and sold on major exchanges like the New York Stock Exchange and NASDAQ, and they're just like any other stock that you would buy through your brokerage account. The nice thing about ETFs is that they're typically very tax efficient. So if you hold them in a taxable brokerage account, you won't have to pay a ton of taxes on your dividends and capital gains. And most ETFs have very low expense ratios, which means that you don't have to pay a lot of fees when you buy and sell the ETF. Some examples of popular S&P 500 ETFs include SPY, VOO, and Z S&P 500. The second type of fund that you can invest in is called a mutual fund. A mutual fund is similar to an ETF in that it's also a basket of securities that contains a variety of different assets, such as stocks and bonds. However, mutual funds are not traded on any public exchange. Instead, you can only buy and sell them directly from the fund company. So how do mutual funds work? Well, when you buy shares of a mutual fund, you're essentially buying a small piece of the underlying stocks within that fund. For example, let's say that a mutual fund has $1 million invested in Apple stock and $1 million invested in Google stock. If you were to buy $1,000 worth of shares in that mutual fund, then you would own 0.1% of the fund. One of the main differences between ETFs and mutual funds is the level of fees associated with them. Mutual funds typically have higher expense ratios than ETFs, so if you hold them in a taxable brokerage account, you will have to pay more in taxes. Another difference is that mutual funds are only priced once per day at the end of the trading day. On the other hand, ETFs are priced continuously throughout the trading day, just like individual stocks. So if you want to buy an S&P 500 index fund, you have two different options. You can either buy an ETF like VOO, or you can buy a mutual fund like CFIA. Both ETFs and mutual funds have their own pros and cons, so it's important to do your research and decide which one is right for you. As I mentioned earlier, one of the main benefits of investing in an S&P 500 index fund is the level of diversification that you get. When you invest in an S&P 500 index fund, you're essentially investing in all of the top 500 companies in the United States. This means that your portfolio will be diversified across multiple sectors within the U.S. economy. This level of diversification can help to reduce your overall portfolio risk. Another benefit of investing in an S&P 500 index fund is the low fees. As I mentioned earlier, index funds have very low expense ratios, which means that you won't and have to pay a lot of fees when you buy and sell the index fund. This can help you to maximize your investment returns over time. So now that you know a little bit more about S&P 500 index funds, let me show you exactly how to buy one through your brokerage account. Let's stick with Vanguard for this example, but the process should be very similar no matter which brokerage firm you use. So the first step is to log into your account and click on the magnifying glass where it says Search for a company or fund. In this box, you're going to type in the ticker symbol for the fund that you want to buy. For example, if you want to buy VOO, then you're going to type in VOO and hit Enter. The next step is to click on Buy. On this page, you're going to enter how many shares of the fund you want to buy. You can use the lines at the top to quickly multiply the number of shares that you want to buy. Once you've entered the number of shares that you want to buy, go ahead and click on Preview Order, and then Submit Order. Congratulations! You've just bought your very first share of an S&P 500 index fund. Also, consider subscribing because we have new videos coming out every single week. Oh, and if you're interested in signing up for Robinhood or Fidelity, I do have referral links down below in the description. You can use my link to sign up for a free stock when you deposit and trade $100. Thank you so much for watching. Until next time.